Meta stock. Meta stock fell on its financial earnings report last night, falling about 15%. Kind of rebounded a little bit and probably going to go back upward. But why would it fall? Especially since they guided for higher revenue and profits. A couple of things that they talked about, Zuck and company talked about, of course, was their AI investments and that they don't see AI investments paying off anytime soon. And honestly, I see that with a lot of companies. NVIDIA, of course, that's the architecture. But then companies like Facebook are going to go ahead and buy that kind of architecture, build up the services, and eventually get those profits. And this is going to be kind of the story for AI stocks across the board, not necessarily just Meta stock. In the meantime, what is Meta stock worth? I broke down the financials to show that probably we're going to see more selling in Meta stock. Probably. And the reason why is not necessarily because of where Meta stock is at this point, so much as there are relative investment opportunities that put Meta stock at overpriced somewhat. It's pretty close, but if we continue to see the US 10-year Treasury yield moving higher as an alternative investment, as the benchmark, Meta stock is overpriced. Somewhat, not much. I mean, they're pretty close when it comes to yield. Let's jump in. I want to show you what I'm looking at because Meta stock, of course, is one of the stocks I like a great deal from a value investing standpoint. And should the price drop somewhat, which I expect all stocks to move lower, given that, this is an opportunity to be pulling the trigger on Meta stock for value investments over a long period of time. Let's jump in. I want to show you some charts. All right, here's a good article from Dow Jones Newswire. Meta Platforms down some 13%, regained some of its losses, but had been down a little more, up to 15% from where it closed just yesterday on the financials. But again, Zuck and company guiding for higher revenue and earnings. In my analysis, I had to increase 2024 projections and 2025 projections for both revenue and earnings. So there's growth there for Meta. The big issue, of course, is a lot of these stocks are overpriced. And when you look at your alternate investments, the US 10-year Treasury, the benchmark, when you compare that, getting 4.72% with very little downside, pretty soon the Federal Reserve is going to flip and lower interest rates, and your 4.72% investment in that is worth a lot more. You could easily pick up anywhere from 10 to 20 to 30% in the next 9 months just off of treasuries versus a lot of downside risk with Meta Platforms. One of the big reasons why the quants came in and sold Meta. So let's here's a good look at the stock. Now, when I put this together, this is the 4-hour bar chart. You can see kind of Meta stock crossed 530 a couple days ago, all the way down to 400. That's 130 points. Nearly, about 22% or something like that. It was a pretty big move downward over the past couple of 2 weeks or so. But I still see it as overpriced at 430. In my article, now I have a Substack. If you want to follow along, there is an article that I wrote up on Meta stock, Meta Platforms, and I broke down my analysis and I looked at 300 and asked the question, will 300 in Meta stock hold? Not necessarily, but that would be a solid value investment at that price. I put a range of 300 to 375, I think is pragmatic. I also think that the U.S. economy is going to slow down, and because of that, stocks, broadly speaking, are going to go lower. It isn't necessarily that Meta Platforms isn't going to be able to perform as much as there are some stocks that are way overpriced, and guilt by association, as these stocks move lower, stocks like Meta Platforms will move lower. As a value investor, that's a great thing if you're looking to pick up Meta stock real inexpensively. 280, probably a shot at hitting that. Not necessarily because of Meta's capabilities as much as the economy, interest rates, inflation, and things like this. None of these stocks operate on an island. they are in an economy, and this economy is shifting and will do so over the next 3, 4, 5, 6 months. Up until the U.S. presidential election, then we'll see what the Federal Reserve does from there. Here's a bigger look at Meta stock, Meta platforms. I can see falling considerably. And when I call in 300, you can see it's sort of right there in the middle. We had been late 2022 all the way down to 100, and I've been calling heavily on some of my articles and videos in my other channel, calling heavily to buy into Meta stock because it was significantly undervalued. It went up by 400%, and now we're going downward. So you can use that information as you wish. Here's a good look at XLC Communications Services Sector ETF. XLC stock is one of the Spider Select Sector ETFs. And if you the chart all the way, or the column all the way over on the right here, this is the yield you would necessarily get by investing in this sector. And as you can see, there's some big players in here: Meta, Netflix, and a couple others. There's AT&T, T-Mobile, Verizon, Warner Brothers, Comcast, Charter, Disney. A lot of these stocks don't really move too much. They have high yield. Charter Communication, 13.24%. They're not the highest. AT&T, 14%. You're really looking for dividend yields when you're looking at these stocks. But I wanted to kind of put this together because Google, Alphabet, just shot up as I'm doing this recording right now. Google issuing their first dividend and better than expected earnings. This pushed the stock up significantly. S&P 500 shot up, a whole bunch of upward movement. The stock market's probably going to rebound quite nicely going into tomorrow, but we still have an economic data piece tomorrow which could make for a push-pull scenario. Regardless, XLC stock, these are your communication services sectors. If you're looking for dividends, there's some high yields in here. If you're just simply looking for yield for price movements, they're taking a look at Netflix at 2.8%, overpriced. So we're going to see some rebalancing with the U.S. 10-year Treasury where it is. Moving forward, I had to move for 2024 and 2025 for Meta stock. I had to push projected revenues higher slightly. It was like 157.1 versus 176.8, something like that, just to move higher on what analysts are expecting. Net margins, the broader U.S. economy, or S&P 500, pushes out about 11 to 12%, depending on the quarter, anywhere from, say, 7.5 to 12.5%, depending on a quarterly basis for net margins. So for Meta platforms to be printing 33.9%, that's 40 cents on every dollar that they bring in. It's a cash cow, which is one of the reasons why this stock gets pushed as much as it is, because investors want that 40 cents on the dollar with very low costs. Projected earnings per share had to push 2024 and 2025 up slightly as well. For the next 4 quarters, we just printed, Meta Platforms just printed Q1 2024, so Q2, 3, and 4, then Q1 2025. You're looking at, what is it, $20.66 for earnings per share the next 4 quarters. Given the current stock price, $431.5, that gives you a yield of 4.788%. Now, you don't get 100% of that, of course. I got someone send me an email and says, what do you mean yield? What does that mean? Well, the next 4 quarters, how much earnings per share per quarter, add them all up, divide by the total price. That gives you your yield. Now, what does Meta do with that earnings? Meta's going to pull in the $20.66 if they hit their target. All right, well, what happens then? Because the investor themselves does not actually receive $20.66. You'll get a dividend. Meta announced its dividend, and that was one of the reasons why the Meta stock pushed as much as it did, because of its first ever dividend. Number 2, Zuck's going to continue to invest in programs that he believes can grow the overall business. A third thing that Zuck and company could do, pay down debt. They don't have much debt, but they could. The fourth, buy back shares. So that yield is important because if they continue to buy back shares on a regular basis and invest in new opportunities, that growth rate, the 4.788%, is really important because it outpaces the U.S. 10-year Treasury, which is only 4.725%. The problem is Treasury is going higher, and that will constrict the economy somewhat. Because of that, $20.66 might not happen, which means there's a lot of risk to the downside with an investment in Meta stock versus the risk relative to what would happen in the U.S. 10-year Treasury. The 10-year Treasury is the benchmark. You look at that first and you say, that's the measuring stick. What can I get out of this stock? Because it is moving higher, you are going to see adjustments lower in these stocks. Plain and simple. The quants are going to come in and they're going to nail these stocks because they're overpriced. NVIDIA, no chance. I've been saying for NVIDIA, I like NVIDIA stock a great deal. I think AI is going to be a huge thing. I think NVIDIA stock, NVDA, is way overpriced. It's going to sell off sharply, especially if treasuries move closer and closer to that mark of 5%. NVIDIA's yield right now is like 2.25. They'll get crushed. Plain and simple. Quants pushed for chasing yield. Yield's no longer there. They'll get out. That will push the stock market lower, especially if we're in an economic environment where we're going to see lower revenue because we see lower employment, lower incomes, lower expenditures, lower revenue to companies, lower profits, lower stocks. I did a real long write-up on my Substack on Meta stock, Meta platforms. There's a link down below. Make sure to click the link and read the article. If you're looking for that kind of content, sign up for the free email newsletter for there as well. At the same time, there's also, for those who are just finding my channel for the first time, got the link down below. Hit the like and follow button. Thanks so much for the comments. I'll break down a lot of these stocks. We're in the earnings seasons and things are going to get real busy real fast. We'll see you in the next video.